Okay, great. Thank you. While I am sharing my screen, I would like to thank today's hosts, um, Nanhua Futures and Darling Commodity Exchange, for us to give us this opportunity to share the China access to all of the audience here. So I'm about to share my screen. So let me know when you can see it.
Yes, we can. We can see the screen. Please go ahead. Thank you.
Great. Okay, thank you, everyone. I think today we have about 30 minutes to go through the China Access Program. One of the most important programs is QFII here. So when you see the cover page, we just list QFII scheme as one of the important programs that we want to introduce here. But when I heard from the organizer, we actually have 30 minutes. So that means that I have much more time than before when I talk about the same program in other forums. So I will give a little bit background on the China Access Program. Although I believe most of the people here, especially from the audience list here I see at the moment, I believe most of you understand how China market is and what is the market access. But since this is a recording program also, so I expect that someone from the European or US may be interested in this topic as well. So just use a couple of minutes. Let's go through the background of the China Access. The background actually comes from all our experience, like in the Standard Chartered, as serving the international investors, especially for fund managers when they invest into China. So the first a couple of questions that we face are probably why investing into China, and how can I invest into China? So I just described it as why and how. So let's start with the why. For why invest into China? I think most of the people here are very clear about the answer. Why? Because of the opportunity. And when we are talking about the opportunity for China, it's not just a small or a short-term opportunity. We believe that this is a tremendous market with a lot of opportunity. And China is big enough to attract a lot of investors from overseas, and with its growth story, which is continuing. So we all know that China at the moment is the world's second largest GDP country, and we continuously to see the GDP growth, especially in the global COVID-19 situation. We still expect that China's GDP in 2021 can grow at a pace of 8%. So it's a very large GDP country with high growth compared to other competitors or peers globally. And secondly, China has the world's second largest bond market and the second largest stock market as well. So we know that by the end of last year, China bond market reached the size of 18 trillion US dollars. And what is special is it continuously has a growth in the past 5 to 10 years. So if we look at the past 5-year CAGR, it's close to 20% growth year on year. And for the stock market, it also has a 12 trillion US dollar size by the end of last year, and year on year growth is 30%. So that's what I talk about as a big enough market with a growth story. That's one of the reasons that China as a country still continuously to attract the attention of overseas investors. And when we talk about the background, we cannot miss the other topic, which is the development of China capital market opening up rules. So we realize that there are different kind of news in the market. The special attention, I think, for the fund investors overseas, what you can see these days is there's the removal of foreign shareholding limits on financial sectors like broker-dealer, funds, and insurance. And I think the most relevant news is we see that Fidelity has got the WFOE mutual fund license in China, and this is the second mutual fund license for WFOE coming after BlackRock, who obtained the license earlier. So there's a couple of names, which is also global asset manager names, on the line to get the mutual fund license. So this is one of the market opening area that continuously develop. And the other important thing is what we are going to touch base with. These are the China Access programs, including QFII, RQFII, and CIBM, etc., that we always talk about. So I will be having more time to talk about the details in a couple of minutes later. And the other thing I cannot ignore is the continuously development on other programs like QD, QDLP, QDIE, etc. And these are the onshore outgoing program, which will be able to channel the onshore funds to the overseas assets. So we see different news coming from different areas like the Greater Bay Area, GBA, continuously develop their own program of the QDIE and QDLP. And Shanghai, Beijing, etc., 60 different cities also have their different programs. And when we are serving the international investors these days, they're not just continuously pay attention to QFII. Of course, this is one of the biggest topic. And the other thing they are continuously looking at are those outbound programs, which will also help increase their fund size in the overseas. So we talk about the capital market continuously open up, and the other important topic should also be included, which is the renminbi internationalization. We know that renminbi currently ranked the number 5 globally as the reserve currency and also the payment currency. And we notice that it still has the rapid growth. And China government lays out different principles to facilitate a two-way flow of renminbi and to support the foreign trade and investment into and out of China. So RMB as a very important currency is also one of the reasons for foreign investors to pay attention to China markets. So we talk about the background, talk about the opportunity in China and the continuously development. Then how about the involvement of foreign investors and their participation at the moment? We see that the foreign investors holding into China market continuously growing. Normally, we will divide their holding into different sets that will include equity, bond, loan, and deposit. But in the past few years, we see that equity and bond holdings has overtaken loan and deposit as the major assets. But for foreign investors, it's never too late to come into the market because at the moment, the equity and bond holdings of the market from foreign shareholding is only less than 4%. So 4% is a very small number, and it's really far away from the market saturation of foreign holdings. So there's a lot of potential for growth, and that's why the foreign investors now, if they haven't entered into the market yet, it's still the right time, a proper time for the investors to consider to get into the market, because as I said, it's never too late. So with that background, I continuously stay on the first page, then we can move on to the second one. While we talk about QFII, I was asked by the overseas investors on the different programs into China. They often feel that China access is much too complicated than other markets. Why? Because comparable to other emerging markets, sometimes they will use, for example, India and Taiwan as an example. India has their program of FPI, Taiwan has FINI, and similarly, China has QFII. But China, in addition to QFII, we used to call that we have QFII, we have RQFII, and CIBM. And at the same time, China also has different Connect program in Hong Kong. So that creates a problem for investors. What program should I choose? But now I would say that since last year, by the end of 2020, QFII has officially become the China Access Program with the broadest investment scope. So that's why since 2020, we see a lot of QFII investors or QFII license issued in the market. And that makes China access more simpler to understand. Because now, if you want to invest into China market, as I just mentioned, we have the second largest bond market, second largest stock market, and even we have the first mutual fund market in Asia. And you can use QFII to invest into all of these markets because now QFII has the broadest investment scope. So similar to Taiwan or India, and you have QFII as an entrance into China, just one license for you to invest into every product that you want. So this is QFII. And when we see page 2, we'll list the evolution of QFII since 2002 when QFII was first launched to overseas investors. And we've seen in 20 years, there have been a lot of changes. But if we look at some critical points, for example, 2011, when the program was just launched, within 10 years, RQFII was introduced. So initially, QFII and RQFII was differentiated by the investment currency. When the investor invests using the currency like US dollar or other foreign currency, you just use QFII. But if you hold RMB or CNH overseas, they can use the program over RQFII. This is the original thoughts of the QFII and RQFII program. But after another 10 years, let's see, when the time goes by to the 2020, CSRC as the QFII regulator has combined QFII and RQFII program. So now it doesn't have to differentiate what kind of currency that investor want to use. They just apply for QFII in one go to invest into China and using whatever currency they want. So this is the development of the QFII program. And when we move on to see the next slide, this is a breakdown of the new measures released by the end of 2020. Actually, November the 1st, 2020 marked as a milestone. What we can see here is QFII investors or QFII license now in the market is over 600. And among the 600 QFII license holders, over 100 license holder was actually got the license since 2020 November. So which means that 1/6 of the license were actually issued in the last years. So that means that the new, hello? Hi host, may I know, is there any problem?
I think we're hearing okay.
Okay. Oh, sorry, then I continue because I heard some sound background.
Yes, please.
Okay, we talk about that 1/6 of the QFII license was actually issued in the past 1 year or less than 1 year, which means that the relaxation of QFII scheme last year is actually the biggest one, which attract more investors. Previously, they were not able to invest or they may not have the interest to invest into QFII, but now they are first capable and second interested in all the investment scope that is open to them. So we break down into 4 relaxation on this page, which you can see here. The first one is combining QFII and RQFII, which I have already mentioned. And the second one is relaxing the qualification requirements. I also mentioned initially there were quantitative requirements for a QFII license applicant, but now it's removed. So making overseas funds, especially hedge funds, qualified for the QFII application. And the third one is optimizing management of intermediaries. The intermediary here means custodian and brokers. Originally, there was restriction on number of custodian and number of brokers that can be appointed by a QFII. Now it's fully removed as well. And the third important part is expanding the investment scope. So I'm going to have more detailed introduction in the coming pages. Next one about the QFII regulation comparison, something that I've mentioned in the early page, but now when you can see the table, you will have a more clear understanding. First, about the eligible applicants, I mentioned that there were some quantitative requirements on QFII before. So you can see that previously, when an investor wanted to invest into China, they need to make sure that they have the proper track record, AUM, net asset, and tier capital. So now it's removed. And what you can see here is After the regulation last year, for a qualified investor, it needs to meet the basic and general requirement listed here. So if I read it aloud, you will feel that it's very simple and quite direct. Sound financial conditions, of course, yes. Managerial person meet the professional requirements of the domicile requirements, which means that the fund, where the fund was established. And you have a sound and effective governance structure, operation is compliance, etc. So it's quite simple, basic, and generic. I think most of the investors, the foreign institutional investors, should be able to meet the requirement. And second, about the license approval turnaround time. Previously, it could be over 20 business days. Now, officially, it's 10 business days. And from what we see of the CSRC, they pretty much stick to the 10 business day turnaround time, which means that if you have everything ready and you have the application form filled, which meet the regulatory requirement, when you submit, you will get the license in 10 business days. And the third one is the intermediaries already mentioned, like you can appoint multiple custodians and multiple brokers. There's no restriction. All right, on the next page, there are other things that usually continuously track the attention of the investors on the investment currency. As I mentioned, QFII used to have the invest coverage restriction on the foreign currency, and then our QFII is for RMB, but now it's removed. You just apply the license for QFII and use different currencies that you want. And the next one is about the investment quota amount, because originally there was a quota. Everyone knows that when they invest into QFII, in addition to the QFII's license application, they need to apply for a quota. So because there was a quota, there is quota management as well. And now quota is removed and there's no more quota management. So everything becomes simpler and simpler. The last question is about repatriation. So these are one of the area that continuously confuse the overseas investors. What kind of documents or what kind of supporting that I need to give to the custodian in order to repatriate? It's not so difficult as at this moment. If you talk about the principal amount can always be repatriated whenever you want. But in terms of a profit and liquidation, it's a little bit different. So previously, for profit and the liquidation repatriation, you need to provide supporting documents like the audit reports, like the tax certificate, etc. But now, with the new regulation, the profit repatriation can be done with a commitment letter. So what is a commitment letter? It's also a simple letter with a standard template. Your custodian, for example, Standard Chartered, can share with you so that you can fill in the commitment letter and then you can repatriate your profit. The liquidation, there's no change because it's easier to understand, because if you fully liquid the fund out of China, then you need to make sure that all the tax liability has been fulfilled before you do the liquidation. So that's the current arrangement. For principal, no special document, you can do it at any time. Profit with a commitment letter, you can repatriate anytime. And liquidation, it follows the original rule that you need to provide the audit report and tax certificate. Okay, so I hope I explained the difference between the old and new regulation clearly. Then this is the, I think, the slides most liked by the investors, because it clearly defines what can be invested and what cannot. So let's start from the lightest color and then goes to the darker ones. So if we look at the black, the white colors, you will see that the common instruments under the stock exchange, including stocks IPO, and the cash bonds under the China interbank bond market, and FX spot, FX derivative, and mutual funds. These are the investment instruments originally in the QFII scope. And then if we look at the light green color, you will see that for securities lendings and for other instruments under CIBM markets and private investment fund, the segregate account and NIC, these are the new investment products opened since the November the 1st of 2020. And the dark green one, which is the only one, the margin trading and securities financing, was available since December last year. So for the rest of the investment product, I think most of the people here could be have more interest on it. I will categorize that into 4 products. The one is exchange bond repo, and the other 3 could be options, CGB futures, and commodities. So these are the investment products that's been included into the QF investment scope according to the QF regulation 2020. But we need to wait for the readiness of the market, because that's the operation rules that need to be defined and agreed before the market is open. So these are the 4 products, and I continuously hear the questions from the overseas investors asking when the bond repo will be open, when the CGB futures will be open, and when the commodities will be open. So frankly, we don't have the answer, but we know that since the product has been already in the scope of CSRC's regulation, it certainly is on their agenda to open it to the foreign investors. But for the detailed timeline, I think probably Dalian Commodity Exchange will have a better idea than us. They certainly have the target launch date in mind, and we hope that it can be done as soon as possible so that more investors can come into the market. Okay, so these are the investment scope. And the last, when you talked about investing to China, the last question I didn't cover. I covered the why, I covered how, and there's another question of when. Usually people will ask, if I submit the application, how long can I start to invest? So these are the high-level timeline that I can share with you. So normally when you submit the application to CSRC, they need 10 business working days, as I mentioned. Then for the custodian, we will help you do the registration with SAFE. That will take 5 working days. So altogether 15 working days. And then for the rest of the time, your custodian will help you to open an account with the custodian itself and open an account in the external market. That will take around 10 working days. So all in all, it's 25 working days plus 10 working days, 15 working days plus 10 working days, that's 25 working days. So around 1.5 months for you to complete all the application process and start investment. So I was mentioning CIBM as well, because for an investor, if you want to invest into the bond market, you can file with PBOC to enter into the bond market as well. Normally, that will take 20 working days as standard turnaround, but nowadays we will see that PBOC tends to give the filing approval in a much shorter time. So they could be around 10 to 15 working days as well. So normally we suggest our investors to do the filing and to do the application at the same time. So it overall will take you around 25 working days and 1.5 months, which means to complete the filing for both QF and CIBM, and then you can start to invest. It's a simple process with the guidance from the custodian. So if you have any questions or problem regarding the China access process and documentation, etc., you can contact me. I'm Jamie from Standard Chartered. I hope that for the kind of level information that I provide today, for the investors overseas, especially for those who are still hesitating whether or when to invest into China, I hope you can have a better idea and make a right decision in the next step. And I hope that this is the opportunity for Standard Chartered and maybe together with Nanhua future companies to work together with you in the near future. So with that, I complete my speech today. So over to you, host.